Stablecoins will destroy the US credit card market. So after Congress passed the Stablecoin Act, establishing really a framework for private digital currency tokens, it really gave a general public a seal of approval that this payment, that this technology is something viable, something secure, and then set the stage for a transformation around the regular consumers paying stuff using this technology. And this is setting up massive turf war worth trillions of dollars between the fintech and crypto and the giant credit card company like Visa and Mastercard. So in this video, I'm going to talk about credit card playbook. We're already familiar with that. We talk about the stable coins, why it's primed to disrupt the entire payment industry. We're going to talk about also like fintech and crypto and what do they need to do to make all this thing work and get rid of the credit card company and disrupt that. We're going to talk also about the credit aspect of it and then kind of like what's next for the industry. Credit card playbook is pretty simple, right? I'm going to charge a 3 to 5% transaction fee to the merchant, to the retailers. On the back end, if the consumer is not paying after 30 days, then I'm going to charge them like 20% interest. I'm going to charge late fees. I'm going to charge. So in the end, the consumer loses, the merchant also loses, and the only one winning is really the credit card company. Now, before we continue, I'm sure a lot of you already know this, but Visa and Mastercards they're not lending you the money. So when you look at your credit card, you're going to see like the bank, you're going to see like, I don't know, Bank of America, or you're going to see some other card. And most of them is going to say, this is the credit card. They're the one lending you the money. Bank of America is lending the money on the credit card. Visa and Mastercard are a payment network. They're not the lenders themselves. When your card is issued by Chase, Capital One, whatever, they're using these networks. And you can see the little logo at the bottom. So that's what they do. And this is why blockchain is so well fit to replace the credit card companies, because this is exactly what they do. They network not only financial transaction, but it could be all kinds of different transactions that could be piggybacked onto the blockchain. That's why stablecoin is primed to disrupt the entire payment industry. This is the first block that was needed for the foundation of a new payment system. And I'm getting quite excited about what's going on. I've been waiting a long time for something like that to happen. And I think the crypto industry has been preparing for this moment for the last 15 years. I'm typically an early adopter of these technologies, but the crypto industry, the Bitcoin, has been talking about how their Bitcoin, you're going to be able to go everywhere and being able to buy things. But only 2% of Americans, adult Americans, are using stable coins or blockchain to do any kind of transaction, buying anything, any products or services. Only 2%. This is nothing. So retails and fintechs racing to roll out stable coins, and this is going after a $4 trillion credit card machine. And the pitch is simple: faster, cheaper, and you can also piggyback some programs into this. For the retailers, also lower fees, faster settlement, but also control the chargebacks that's happening. So consumers that receive their product and services and then they just do a chargeback, and then you have to fight them in the back end and all that kind of stuff. And this would bypass the whole credit card company network altogether. So whether you agree that it's going to kill and destroy the credit card companies, it may not be eradicate them like Kodak, but no matter what, it's going to really seriously disrupt their current revenue model. The 3 to 5% that they're charging for the swipe fees, the transaction fees, this is going to be in jeopardy, because the promise of this technology of blockchain is to reduce the price dramatically. If that happens, these credit card companies are not going to be able to survive. They're going to have to find another way to make money. If you look at this article, Visa and Mastercard race to tame the $253 billion crypto threat. So a turf war is breaking out in the vast world of digital payments. So the tech firms and crypto startups are moving into a territory long dominated by Visa and Mastercard. And the pitch, again, lower fees, faster settlement, and a way to go around these two giants. Digital tokens are typically pegged to the dollar and allow consumers to pay merchants directly from their crypto wallets without going through the bank or a card network. That means that it's as if you're paying cash for your purchases. It goes directly from your digital wallet to the retailer's digital wallet, going through the blockchain, but no banks, no other networks are coming into it. So there's no toll fees that you have to pay. Last year alone, US businesses paid an estimated $187 billion in transaction fees, and 85% of it went to Visa and Mastercard. This is a massive revenue for them, and this technology, this blockchain, could really disrupt that revenue model. That's why Visa and Mastercard are going to fight tooth and nail to preserve that. Pressure is prompting Visa and Mastercard to brand themselves not as just the old school toll collectors, but as a backbone for all kinds of digital transaction. They've done some kind of initiatives around the cross-border payments. In the past, Visa and Mastercard have been able to neutralize competitive threats and disruptive technology by either absorbing them or often do some other solution to preserve their pricing power. You can see this is a huge amount of money. They're going to do whatever they can to preserve that kind of pricing. But this is a little bit different. In the past, of course, they had to deal with one competitor or two or a different technology. Now, this is going to be very different. The blockchain technology is going to be like a swarm of bees. And then it's going to be very hard for Visa and MasterCard to fight that swarm of bees with a baseball bat. So it's just going to be impossible to do that unless they do some kind of innovations that's going to stave off all the competition. Stablecoins is an amazing financial disruption story, and it's a rare break from the crypto industry's reputation for speculation, scam, and gambling. So, and kind of like market manipulation, pump and dump schemes. That Genius Act is really making it more reliable, or at least give a sense of safety for a lot of people that want to use it. That momentum is beginning to reshape corporate behavior already, like Walmart and other massive retailers are considering stablecoin pilots. That's going to be absolutely massive. Still, displacing these card networks, the Visa and MasterCard, that's not going to be easy, especially in the US, because consumers are used to not just the cards, they're used for rewards, they're used to fraud protection, they're used to credit access, basically being able to have like a 30-day float in order to pay their statement, basically. So they have that aspect of it. When we look at stable coins, this is like paying cash. So you don't have that 30-day float. So other components that are already out there are other solutions out there in the blockchain world, in the crypto world, that would need to be integrated, but it's there. The solutions are there already. It's just to make them integrate with the rest of the ecosystem. Like behind the scenes, the payment can take place without ever touching a card network. So instead, it's processed entirely on the blockchain protocol and allows the merchants to accept USDC directly into their crypto wallet. And this could instantly convert into a local currency, US dollars or whatever it is. Coinbase and Shopify are partnering, and Shopify is offering a 1% cashback for the consumers that are paying with USDC. Coinbase has launched its own payment platform to enable stablecoin acceptance across more e-commerce providers. So they're really trying to push this across many different retailers. That pressure is forcing Visa and MasterCard to go on the offense. So now they can't just stay back. They have to take action, and both are promoting their global merchant reach. Their brand is being recognized by all these different merchants, and then you want to have access to these retailers, then maybe you want to go through their network. It's going to be a lot easier for you to access them. Also, fraud protection, consumer privacy, and brand trust. On the consumer privacy, they had done like a network tokenization technology that basically was hiding some of the account information when you were buying online, which is obviously something that comes with the blockchain technology. So both networks, Visa and Mastercards, dabbled into integrating stablecoin into their ecosystem since 2021. They've done all kinds of investment, but now this is going to be even bigger. They're going to be doing even more investments because they see that this is turning into a race. This is turning into a turf war. So there's a couple of things like that. Visa Ventures also invested in a stablecoin infrastructure provider, BVNK. You see the Mastercard joined with Paxos Global Dollar Network to do something very similar. There are more laws and regulations that are coming up. Clarity Act, for example, is being worked on. They're planning to have that into law at the end of September. There's also a crypto policy report that's going to be released this week on Wednesday. So that's going to be very interesting to see that. I'm going to have another video actually to talk about that, kind of like have my prediction of what are we going to see in that crypto policy report. Fintech and crypto have their work cut out for themselves though, because it's not easy to displace the credit card company. So first of all, on the stablecoin front, not even talking about the payment processing, there's no FDIC on the stablecoins. So what are we going to do about that? If I have money in the bank, in the US bank, I have FDIC, my deposit is insured by the federal government. I don't have that on stablecoin. The other thing too is that on the credit card, we have rewards, we have fraud protection, we have credit, we have a 30-day payment window. So what are we going to do about these things? We're going to need to integrate and figure out a way to do this so that we can really seriously compete with these credit card companies. One big component of that is the credit. So when we pay with a stable coin, we're paying cash really. When we pay with a credit card, we have 30 days to pay it back. So this is where some emerging technology options could be interesting. So buy now, pay later, like companies like Affirm, Klarna, are building actually a stablecoin compatible installment plans. They're already pushed into all kinds of very interesting stores. I mean, we see them on DoorDash, we see them on grocery store, we see them obviously on Amazon, dentist's office, doctor's office, all of that. So they're all over the place. It would be great to have it's a fintech company. These are fintech companies, so it would be, they're almost already there. They understand what they need to do in order to integrate with the stablecoin and make it more competitive compared to a credit card company. Then we have on-chain credit. So we have DeFi platforms that would basically give you credit on the blockchain. We also have crypto line of credits that could be done as well. So it give you like a 30-day float, but it would be backed by your stablecoin balance. Lots of work to be done there. You can see that there's a lot of different components that are already present, and how they're going to integrate with one another is going to be key. So what's next? Well, Visa has a roadmap already that's embedding stablecoin into their network with new strategies and new tools and new integration and new partnership with Stripe, with all kinds of stuff that they have. And Mastercard with the Paxos Global Dollar, they're also going to be integrated with that. More importantly, I think it opens doors to other companies to go and literally take over some part of the Visa and Mastercard revenue, some part of Visa and Mastercard's network into the what I would call the real world, when you actually go to a physical store and have your phone and be able to pay with your digital wallet. So instead of paying with a credit card, this is where it's going to be very disruptive. You're going to see some difference here. It's going to bring in some new players that were not there before. And like I said, this is not like the old days where Visa and Mastercard were fighting like with one competitor or with one new technology or with one innovation. They're going to be fighting a swarm of bees with a baseball bat, and this is going to be very, very challenging. So I'm pretty excited about the technology changes that's happening, the whole crypto world, how it's going to be evolving. I think it's extremely exciting, and I haven't been excited like that since 15 years ago. This is a very interesting story. You can see there's a lot of work that's happening, lots of things, new things and innovations that are happening. I'm gonna stay on top of that and bring you updates on a regular basis. If you don't want to miss out, make sure you like and subscribe to my channel, and see you next time.